Dogecoin tests 19 cents support as tight range signals breakout potential. Traders identify continued divergence between rising volume and flat price as a key accumulation signal, often a precursor to volatility expansion within 24 to 48 hours. Meme coin consolidates near psychological support while institutional flows and elevated trading activity hint at position building ahead of potential breakout. Dogecoin fell 0.61% to $0.192 during Tuesday's session, retreating from intraday highs of $0.195 as sellers capped gains at resistance. The move follows Monday's brief push toward 20 cents, with traders citing steady institutional profit-taking at upper resistance levels. Despite muted price action, trading activity climbed 20.26% above the weekly average, with total turnover reaching 942.7 million tokens, roughly double the 24-hour mean. The elevated volume, paired with limited price movement, signals institutional accumulation rather than broad retail participation, suggesting positioning ahead of a potential breakout event. Doge traded within a tight $0.0132 range between $0.1860 and $0.1953 across the 24-hour period, holding near the 19 cents psychological threshold. The session's volume peak at 942.7 million occurred as the token tested resistance at $0.1925 before reversing lower, confirming short-term rejection. Support developed firmly around $0.1860, with repeated defenses across the mid-session window. The final trading hour showed Doge stabilizing near $0.1916 on fading turnover, reflecting balanced order flow after earlier volatility spikes. Doge's short-term structure shows constructive accumulation forming beneath resistance. Hourly data reveals higher lows at $0.1914, $0.1916, and $0.1920, confirming an ascending channel pattern supported by institutional volumes exceeding 10 million per candle during recovery sequences. Immediate resistance sits at $0.1925, while broader trend ceilings remain at $0.2060 and the monthly Fibonacci level near $0.2663. The sustained compression between $0.1860 support and $0.1925 resistance highlights a tightening volatility band, typically preceding larger directional moves. Market participants are monitoring whether institutional flows maintain momentum above current volume thresholds. A clean break above $0.1925 could expose short-term targets near 20 to 21 cents, while failure to hold $0.1860 support risks renewed downside pressure toward the 18-cent zone. Traders identify continued divergence between rising volume and flat price as a key accumulation signal, often a precursor to volatility expansion within 24 to 48 hours.